Good morning, students. Good morning, students. Welcome you all once again in the live virtual classes organized by Board of Studies of ICAI. Friends, today I am going to take you through with the small standard, which is Ind AS 34, and we will complete this standard in today's class itself in 3 hours. So, students, what is meant by interim financial reporting? How it is different from the normal financial reporting? So as per Ind AS 1, we have to do the financial reporting at least for a year. I mean to say the frequency of reporting has to be annual, minimum has to be annual. But what is meant by interim? So first of all, as far as the title of the standard is concerned, it is talking about two aspects. Number one is interim, number two is your CA final paper. Okay. What is your CA final paper? CA final paper is on financial reporting. So interim financial reporting. If I talk about the word financial reporting means reporting of financials. It means reporting of financial statements. When I'm saying reporting of financial statements, right? Reporting of financials. So it is talking about preparation of financial statement. It is talking about accounting of financial statement, right? It is talking about preparation of preparation of financial statement, accounting of financial statement. So it is talking about financial statement, right? And what is meant by financial statement? Can anyone tell me what is meant by financial statement? What are the component of the financial statement? What are the component of the financial statement? Balance sheet, statement of profit and loss, then statement of changes in equity. What are the component of the financial statement, my dear friends? What are the component of the financial statement? Balance sheet, statement of profit and loss, statement of changes in equity, statement of cash flows, and notes to accounts. These are the component of the financial statement, and as per Ind AS 1 year comparative information has to be there in the financial statement, and as per Ind AS 1, financial statement has to be prepared and presented at least on an annual basis, right? This is about the financial statement. Okay. Now, my dear friends, now financial reporting means reporting of financial statement. Reporting of financial statement means balance sheet, P&L, cash flow, statement of changes in equity, and notes to accounts. Now, what is meant by the word interim? What is meant by the word interim? And how it is different from annual? Please tell me. What is meant by word interim and how it is different from the word annual? Interim means a financial statement for a period less than 1 year. Interim means financial statement for a period which is less than 1 year. Okay. Okay. 3 months, 6 months, 9 months. Okay. Quarterly basis, on a quarterly basis. So which companies in India are required to prepare their financial statement or required to report their results on a quarterly basis? Which companies in India are required to publish their results, financial results on a quarterly basis or half yearly basis or 9-month basis? Listed companies. Listed companies are reporting on quarterly basis or half yearly basis or on a 9-month basis, right? Listed companies. And as we understood, interim period means period for less than 1 year, say quarterly, half yearly, okay? For example, Q1, Q2, Q3. These are known as and Q4. These are known as a quarter. These are known as a interim period, right? Now, my dear friends, results filed by listed companies are as per the format given by under SEBI LODR regulation 2015. Yes or no? Friends, are these listed companies which are publishing and filing their results, is it as per Ind AS 34? I am talking about the format. Whether the format is given under Ind AS 34 or format is applicable, the regulation is applicable as per SEBI LODR regulation. Have you heard about SEBI LODR regulations? Yes. So it is applicable as per SEBI LODR regulations. It is applicable as per SEBI LODR regulations. So my dear friends, financial results which is filed with the SEBI, it is as per SEBI LODR regulation 2015. And when you prepare interim financial statement, it is applicable as per Ind AS 34. It is applicable as per Ind AS 34. Okay. Now the question is whether Ind AS 34 is applicable on the results to be published as per the SEBI requirement. Whether Ind AS 34 is applicable on results to be published as per SEBI requirement. Tell me. Yes or no? Sai Kiran, yes or no? These results have been prepared as per SEBI LODR requirement and Ind AS 34 is not applicable to these results. Ind AS 34 is applicable to the interim financial statement and these results have been prepared or extracted from these financial statement. Friends, let me show you one of the financial results to be filed by the SEBI. Let me show you, okay? Should I show you the financial results to be filed by the SEBI? To be filed with the SEBI, okay? So this is Indigo Airline website. I went to the investor relations section and in the investor relations section, I'm opening the latest June financial results of Indigo Airlines. Okay. Can you see the June financial results? Statement of unaudited consolidated financial results. Statement of unaudited consolidated financial results. Can you look at this result? Yeah. Statement of unaudited consolidated financial results for the quarter ended 30th June 2026. Is it your financial statement format? Is it your P&L? The multiple columns are there since this result is for the quarter ended June 26. So June 26 quarter is there. Comparative quarter of the last year, the corresponding quarter of the last year is also there. Okay. So June 26 quarter is there. June 25 quarter is there. The last quarter is also there. So current quarter, June 26. Immediate last quarter, which is March 26 quarter, means 3 months ended March 26. Then the corresponding quarter of the last year and the last full year. 4 columns are there. The P&L format is the same format, which is as per Schedule 3. But whether this P&L is a Schedule 3 P&L, I mean to say, whether it is a financial statement P&L, it is having a 4 column. No, financial statement P&L is having only 2 column generally, right? So, but even though financial statement year-ended financial statement are having a 2 column, but in the quarterly financial statement, probably they also have the 4 columns. Okay, probably they also have the 4 columns. Right? So now, my dear friends, this P&L is there. Okay, let's assume the P&L is the same P&L. The only thing is in this P&L, yes, reporting of previous quarter as a comparative is required. As a comparative is required. Okay, as a comparative is required. Now, my dear friends, while this P&L format is the same P&L, but at the end, you will be finding at the end reserves excluding revaluation reserve, paid up equity share capital. This line item number 13 and 14 is never part of your P&L format, never part of your P&L format in the financial statement. Correct? Now, after P&L, let's go to the next page. It is notes. It is limited notes. So friends, it is only limited notes. You can see that 3 pages results. 1 page is on the P&L. The second and third page is on the notes to results. Then, my dear friends, then after consolidation, after consolidated results, there are standalone results. Standalone results, P&L, and then there is a notes to results. Okay. Is it a financial statement or is it a financial results? Is this a financial statement or this is a financial results? Is this a financial statement or financial result? This is a financial result. Okay. Is that clear? This is a financial results. Number two. Whether this is as per Ind AS 34 or this is as per SEBI LODR regulation? This is as per SEBI LODR regulation, right? So as per Ind AS 34, financial statement means balance sheet, P&L, cash flow, statement of changes in equity, and notes to accounts. Okay, is that clear? So you can see this is only having your P&L and few notes, but your financial statement is having. Hello, yeah, do you have any question? Yeah, so this is your financial results. So few students have joined recently. So students, I was showing the financial results, latest financial results of Indigo Airlines. You can see that there is a P&L only which is filed with the stock exchange. Only P&L is filed with the stock exchange. That is number one. And this P&L is having 4 columns. Current quarter, which is June 26, immediate past quarter, which is required as per SEBI LODR regulation. Sai Kiran, SEBI LODR regulation 2015 is applicable to the listed companies. In addition to MCA, SEBI is the regulator for listed company. So SEBI format requires, if you file the results of the current quarter, you have to give the comparative of the immediately past previous quarter also, right? And of course, the same quarter of the corresponding quarter of the last year, and the last full year as well. Okay. So these are required. We will talk about the period later on. हम period पे बात करेंगे बाद में, right? I'm just showing you the results. Okay. So these 3 pager, right? These 3 pager. One is your P&L format. Second one is your notes to results. Few notes to results. These 3 pages, whether these 3 pages constitute financial results or it constitute financial statement. That was my question. I need answer from all of you. It is financial results as per SEBI LODR regulation, not as per Ind AS 34. Okay. So this was the financial results. So my dear friends, this financial results are required to be prepared as per the format prescribed by the SEBI LODR regulations 2015. But tell me, in the listed company, how the accounting is happening, how the reporting is happening. If you have to prepare the financial statement, whether these financial statement has to be prepared as per SEBI regulation or as per Ind AS. As per Ind AS, Indian accounting standards are applicable for the preparation and presentation of the financial statement. Now these results, from where these results have prepared, बना तो P&L ही है ना, ये P&L कहां से आया? ये तो आपने पब्लिश किया. द P&L which you published, the result which you published must have been prepared from some document, must have been prepared from some backup numbers, data. So what is that backup number or data? So that backup number or data, right? So basically that financial statement prepared as per Ind AS 34, and from those interim financial statement, the numbers have been extracted, the result have been extracted. Okay. These financial results have been prepared or extracted from these financial statement. So Ind AS 34 is applicable to interim financial statement, and these results have been prepared or extracted from these financial statement. Okay. Right. Now let me give you an example, real life example. Bharti Airtel Limited. Bharti Airtel Limited is a listed company. Bharti Airtel Limited is a listed company. They are required to publish and file their financial results, results with SEBI, which is stock exchanges, with stock exchanges, NSE, BSE, with stock exchanges on a quarterly basis as required by SEBI LODR regulations 2015. SEBI LODR regulations 2015. Okay, right? They are preparing their financial statements for the interim quarter, for the interim period, that is every quarter, and also getting it audited by the statutory auditors, and also getting it audited by the statutory auditors. Okay, by the statutory auditors. Okay, right? Please advise which guidance is applicable for the results and the financial statements. Okay, and the statements, and how the results are getting prepared. Sankiran, it is not limited audit. Sankiran, there are two aspects. Okay, so one is limited review and second one is audited. Like Tata Steel, Tata Motors, Bharti Airtel, these companies are getting it audited on a quarterly basis, right? But many companies like Indigo Airlines, they are getting it limited reviewed. Okay, so there are two kind of audit which is allowed as per the SEBI regulation for the results for the quarterly filing. One is limited review. The second one is audit. Limited review and audit. Okay, so what is limited review? In limited review, the auditor is providing a negative opinion. Negative opinion does not mean negative opinion. So the auditor says that nothing comes to my mind which makes me believe that these financial statements are not on a true and fair view. मतलब मुझे ऐसा कुछ नहीं मिला जिससे मैं ये समझूं कि फाइनेंशियल स्टेटमेंट ट्रू और फेयर नहीं है. नेगेटिव ओपिनियन, राइट? नेगेटिव डज नॉट मीन नेगेटिव, मीन्स उल्टी तरीके से बोलते हैं. And what is about the audit? In the audit, auditor write that the financial statements of this company is reflecting true and fair view. So auditor is giving a positive assurance, right? And in the limited review, the auditor is giving a negative assurance. Okay, right? Right, guys. Sai Kiran, are you clear? That is nothing called limited audit. It is called as a limited review, and limited review is known as a unaudited. That is why Indigo writes it as a unaudited. Why? Because they are getting it limited reviewed. Okay, and audit means full audit. They have to do the internal control testing. They have to check all the samples. They do the sampling. So they do all the test steps of the audit. But in limited review, what they do the analyticals. Okay, they check the major expenses, income, analyticals, right? They do those kind of stuff. So in this case, Saminathan is saying, in this case, sir, firstly, Airtel will prepare the interim financial statement as per Ind AS 34 and audited based on the information, right? So first of all, interim financial statements prepared, audited, prepared as per Ind AS, right? Ind AS 34 and audited as per Ind AS 34. Okay, now financial results are finalized as per SEBI, are finalized, so as per the format of SEBI LODR regulations and prepared and extracted from these financial statements. ये P&L कहां से आया? वो पूरा जो आपने बनाया था ना फाइनेंशियल स्टेटमेंट, उसके पीएनएल को एक्सट्रैक्ट कर लिया। इज दैट क्लियर? इज दैट क्लियर? नॉट क्लियर? प्लीज टेल मी, इज दैट क्लियर? नॉट क्लियर? या इज दैट क्लियर? यस? So friends, so far we understood listed companies are reporting on a quarterly basis. They file their financial results. Financial results are prepared as per SEBI LODR regulation format, right? And so what about audit of financial results? Yes, the audit of the financial results. So these financial results have been prepared as per SEBI LODR. So since the financial statements are audited by them, so it is automatically audited. It is automatically audited. Okay, right? Of course, they are taking time the numbers. They are taking every number from the financial statement. Okay, but what auditor audit? They audit the financial statement, which is prepared in the background. Which is prepared in the background. Now, let's talk about the published. Published. Whether these financial results are published. Whether these financial results are published. Yes. Otherwise, it will be a non-compliance. Otherwise, it will be a non-compliance. Yes, it has to be published. The financial results has to be published. But whether these interim financial statements are also getting published? No. So Bharti Airtel is not publishing their interim financial statement, while Infosys TCS are publishing their interim financial statement also, because there is no mandatory requirement, and that is why Bharti Airtel is not publishing their interim financial statement, while Infosys and TCS are publishing. So their interim financial statements are audited and they are publishing, but Airtel is not publishing. Why? Because there is no mandatory requirement, right? So no mandatory requirement of publishing the interim financial statement on the website of the company, right? On the website of the company. एनुअल रिपोर्ट तो नहीं बनती ना क्वार्टरली बेसिस पे। एनुअल रिपोर्ट का नाम ही एनुअल रिपोर्ट है, वो तो एनुअल बेसिस पे बनती है। मैंडेटरी रिक्वायरमेंट ऑफ publishing on the website and filing on the stock exchange. Okay, right? Friends, this is not written in your standard. This is a gyan which I want to give you, practical gyan. Okay, I hope with this everything to everyone is clear. So far you guys have understood the difference between the financial results and the financial statement. Ind AS 34 is applicable to the financial statement, and these results are extracted from these financial statements. Is that clear, my dear friends? Is that clear to everyone? Shall I move forward? Right? These were the gyan, practical gyan. Okay, these are not covered in your Ind AS 34. These are the practical gyan. Okay, clear? Now, whether Ind AS 34 talks about on which entities Ind AS 34 is applicable. Guys, tell me whether Ind AS 34 tells you that on which entity Ind AS 34 is applicable. Yeah, मिस्टर कसक यादव, क्या Ind AS 34 बताता है किन एंटिटीज पे Ind AS 34 एप्लीकेबल होगा? On which entities Ind AS is 34? On which entities Ind AS 34 is applicable? Manoj? No. Ind AS 34 does not mandate. It does not mandate. Okay. Ind AS 34 does not mandate to prepare interim financial statement. It does not mandate to prepare. Okay. Rather, if a company is required under any law, say SEBI LODR, okay, to prepare the interim financial statement, or the company has decided to prepare interim financial statement, then Ind AS 34 talks about how to prepare and present interim financial statement. For example, there are so many startups. So normally in these startups, the funding is given by the investors. Let's say Manoj and Rohan are the investors. Okay. So their friend, so one of the common friend of Manoj and Rohan, so he has started a startup, and Manoj and Rohan is the filthy rich. person. So Manoj invested 50 crore rupee in that startup. Rohan also invested 50 crore rupees on that startup. So now Manoj and Rohan being an investor in the startup, guys, will you be interested in knowing the results, knowing the performance of that company on a regular basis or not? Or will you wait for the year-end financial statement? Yes, you will be interested in knowing the financial performance on a quarterly basis, monthly basis, right? On a regular basis, right? Yes, Manoj. Yes, Rohan. So basically, but whether this startup being an unlisted private limited company, whether they are required to prepare their financial statement on a quarterly basis? No. Are they required to get it audited on a quarterly basis or limited review on a quarterly basis? No. Okay. So, but being an investor, you want to get it audited on a quarterly basis. You want to get the audited performance on a quarterly basis. You want that the books of accounts has to be maintained and books of account has to be hard closed on a quarterly basis from the governance perspective. And hence, both the investor Manoj and Rohan wants this unlisted startup to get the financial statement prepared on a quarterly basis and get it audited on a quarterly basis. Now, my dear friends, which standard will be applicable if they decided to present, audit the interim financial statement? Which standard will be applicable? Ind AS 34 will be applicable. So Ind AS 34 does not mandate. Ind AS 34 does not mandate. Okay. Ind AS 34 does not mandate on which entity it is applicable. If the entity is required by any law or entity has decided to prepare interim financial statement, then Ind AS 34 talks about how to prepare and present interim financial statement. Okay. Sir, we are required to file quarterly results to CB UAE, sir. So we are done review every quarter and prepare condensed. Yes, you are right, Manoj. So condensed FS, I will be speaking after some time. I will be covering the condensed financial statement. But yes, it is for a quarterly results. Of course, you are doing a limited review, right? Limited review is also allowed. Audited or limited review. Okay, it is also allowed. If a company was formed during the year, say 1st October 2021, and they are preparing their first financial statement for the period ending 31st March 22, whether this period is called interim period and whether Ind AS 34 will be applicable? Tell me yes or no. If a company was formed during the year, say 1st October 2021, the company was formed and they are preparing their first financial statement for the period ended 31st March 22, whether this period is called interim period and whether Ind AS 34 will be applicable. So Manoj and Saminathan has told no. Rohan is also saying no, it will not be covered by Ind AS 34. Saminathan said it is not an interim period. Ravinder is saying no interim. You are absolutely right. This is not the interim period. Why the company is preparing 6-month financial statement from 1st October to 31st March? Why company is preparing the first financial state? The company is preparing the first financial statement, which is for 6 months, because the company has incorporated in this year. This is not considered as an interim period because the company has not chosen the period of less than 1 year. Rather, the company has to prepare the first financial statement, which is less than 1 year due to incorporation during the year. Hence, these financial statement will not be treated as an interim financial statement and these will be treated as a full financial statement as per Ind AS 1. Ind AS 1 will be applicable, 34 will not be applicable. Right, friends? 34 will not be applicable, friends. 34. Clear? A company was liquidated on 30th September 2021. They have prepared their last financial statement for 6 months ended 30th September 2021. Whether it is called as an interim period and whether Ind AS 34 will be applicable? No, it is not an interim period. Ind AS 34 is not applicable. This is not considered as an interim period as entity has not chosen to prepare an interim period within the full year. Since it is the last financial year and that is why it is for the 6 months. Ind AS 1 will be applicable. Absolutely right, Saminathan. Ind AS 1 will be applicable. Okay, right? Financial reporting, we discussed reporting of financial information in a structured manner following some rules and principles, for example, financial statements. Okay. What is the objective of Ind AS 34? This standard prescribes the minimum content of interim financial report, means the minimum content of financial statement, and principle for recognition and measurement in interim financial report, IFR, interim financial reporting. Okay, what is interim financial reporting? Reporting of financial statement on an interim basis. Okay, scope. This standard does not mandate which entity will prepare the interim financial statement, which company will prepare the interim financial report statement, same thing. This standard is applicable when an entity decided or required to prepare the interim financial statements. For example, listed companies are required to do quarterly or half yearly reporting. Ind AS 34 is applicable. If it is a debt listed company, it is a half yearly reporting. If it is a equity listed company, it is a quarterly reporting. Okay. What is the interim period? Period for less than 1 year, say quarterly, half yearly, etc. What is interim financial report? A financial report for a period less than 1 year, which includes either a complete set of financial statement or a condensed set of financial statement. My dear friends, any question so far? Any doubt so far? Any question, any doubt so far, my dear friends? अभी तक जो भी हमने कवर किया, कोई डाउट? ये एक छोटा स्टैंडर्ड है, theoretical standard है, but I will also show you the real life example and from this standard. Charita Reddy has confirmed there is no doubt. What about others? Selendra, do you have any doubt? Kasak? Saminathan is saying, sir, debt listed company, why 6-month reporting? Saminathan, as per SEBI LODR, SEBI LODR has allowed an exemption to the debt listed companies. Exemption, I mean to say, a relaxation, which says that they can do the half yearly reporting, because when it is a debt listed company, the debt holders are very limited. The equity shareholders are scattered, right? So that is why they said, if you are debt listed, even though if you report on a half yearly basis, it will be okay, right? So, Sai Kiran, if you have any doubt, Manoj, if you have any doubt, no, great. Ravinder, yes, Rohan. So everybody has confirmed, no doubt. Okay, everybody has confirmed except Sai Kiran. Okay, Sai Kiran, do you have any doubt? Okay, let's move on. If no doubt, then let's move on, right? So friends, now interim financial report means interim financial statement. Okay, now it can be of two types. Number one, either a complete set of financial statement or a condensed set of financial statement. Complete means, as the name suggests, complete means complete. Okay, full. Complete means full, right? Full. And as the word suggests, condensed means crisp, a crisp version, right? Full version and crisp version of the financial statement. So complete set of financial statement is full version of financial statement, and condensed means crisp version of financial statement. Full version and crisp version of the financial statement. Okay. Now, my dear friends, if I talk about interim financial report, so if you are preparing a complete set of financial statement, if you have decided that every quarter I will prepare a full set just like an annual set, means I will do the complete related party disclosure, segment reporting, contingent liability, actuarial disclosure. I will prepare the 10-15 pages accounting policy. I will give all the breakup of balance sheet item, P&L item. I will give all the reconciliation, disclosures, everything I will provide like a full set, like an annual financial statement. If it is like a full set, if it is like an annual financial statement, if it is like an annual financial statement, then it is known as a complete set of financial statement. If on a quarterly basis, the company is preparing a full set of financial statement, right? The company, whether company will prepare the full set of financial statement on an interim for an interim period as per Ind AS 34. No, then it has to be prepared as per Ind AS 1. It has to be prepared as per Ind AS 1. Okay, Ind AS 1 say that balance sheet, P&L, cash flow, equity, notes, everything has to be prepared in full. Okay, everything has to be prepared in full. Is that clear? Let me give you example. I joined Bharti Infratel Limited in 2015. Okay, 15-16. It was a listed company. And Bharti Infratel Limited was a subsidiary of Bharti Airtel Limited. And this company used to get the financial statement audited on a quarterly basis. And then they are preparing the financial results as per the SEBI LODR form, as per the SEBI LODR format, and they pick the information from the financial statement. Now, every quarter, the company prepares 60 pages of the financial statement, 60 pages. When I joined, I asked my boss why we are preparing this full set of financial statement on a quarterly basis. We don't need to file the full set anywhere. We don't need to publish it anywhere, right? The annual I understand. At the year end, I understand because it will become part of our annual report. We have to publish, we have to file our full set of financial statement, which is required by the Companies Act. We have to file in our MCA also. But why we need the full set of financial statement on a quarterly basis? It is consuming a lot of bandwidth. We are just repeating, or we are just reading, repeating, drafting the accounting policy on a quarterly basis. At least 15-16 pages we are copy pasting, we are reading whether it is still hold good, does not hold good, for example, right? We are giving actuarial related disclosure, not required by anyone. So we are giving lot of disclosure which is not required at all. For example, in June, I have shown you the June results. I have shown you the June results as per SEBI LODR. Indigo has filed only these June results. I mean to say only these financial results for the quarter ended June recently. They have not filed anything else with respect to the financial statement. Friends, tell me whether those financial results covers only P&L numbers, or those financial results were covering the balance sheet, cash flows, statement of changes in equity, accounting policy. Were they covering those aspects? No. The financial results for June has covered only the P&L numbers. Then why do I need to do this task of 60 pages? Preparation of 60 pages financial statement on a quarterly basis. Why do I need to do this task? So I told my manager, I told my boss, sir, why do we need this? He said, Alok, what is the alternative? I said, sir, instead of preparing a complete set of financial statement, why can't we prepare condensed set of financial statement, which is allowed as per Ind AS 34? He said, Alok, what is meant by condensed set of financial statement? I told him, sir, what we will do, instead of preparing the full set of financial statement, which is balance sheet, P&L, cash flow, statement of change in equity, notes to accounts, we will prepare condensed balance sheet. So what is the component of the condensed set of financial statement? Condensed balance sheet, condensed P&L, condensed cash flow, condensed statement of changes in equity, and significant or limited notes to accounts. Significant or limited notes to accounts. Now he said, Alok, what is the difference between balance sheet and condensed balance sheet? I told no difference. So the balance sheet and condensed balance sheet is the full balance sheet. He said, what is the difference between statement of P&L and condensed statement of P&L? I said, no difference. It is a full P&L. It is the full cash flow. It is the full statement of changes in equity. Then he said, then why you are calling it as a condensed? Why you are calling it as a condensed, right? And of course, when we are talking about a preparation of a financial statement, if it is a 60-page financial statement, how much page your balance sheet will take? How much page your balance sheet will take? 1 page. इतना ही होगा ना. P&L will take 1 page. Cash flow will take 1 page, maximum 2 page, right? Statement of changes in equity will take 1 page. 4 to 5 pages. These 4 component will take 4 to 5 pages. So out of 60 pages, tell me which component will take 55 pages? Notes to accounts will take 50 to 55 pages, my dear friends. So here comes the actual beauty of Ind AS 34. Ind AS 34 says that you are not required to give every notes to accounts. You are required to give only 2 category of notes to accounts: significant notes to accounts and limited notes to accounts. Okay, what is that? We will discuss. But before that, let me tell you why there is a difference. What is the difference between a balance sheet and a condensed balance sheet? A balance sheet and a condensed balance sheet. Okay, so let me show you the interim financial statement of one of the large listed company. Let me show you the interim financial statement of the large listed company. Okay, दिखाऊं मैं आपको large listed company के interim financial statement? Should I show you? Okay. Okay, let me show you the interim financial statement of the large listed company, which is Infosys Limited. Infosys Limited. Okay. Friends, please confirm if you are able to see the Infosys Limited interim financial statement, condensed standalone financial statement. Are you able to see this Infosys Limited condensed financial statement for 3 months and 6 months ended September? Yes. Can you see condensed balance sheet, condensed P&L, condensed equity, condensed cash flow? Can you see this? Yes. Now, let me show you the condensed balance sheet. I hope this balance sheet is visible to everyone. Can you see this condensed balance sheet? Condensed balance sheet as at September 30, 2021 and corresponding period is March 21. My dear friends, why the corresponding period is not September 30, 2020? Why it is March 31st, 2021 for balance sheet? Balance sheet is always as on date. Balance sheet is always as on date, right? My dear friends, if Tata Steel has purchased a land in 1950 for 20 lakh rupees, what is the value of the land which will come in the balance sheet of 31st March 2026? 20 lakh rupee. 20 lakh rupee, assuming cost model has been used, right? What is the value of the land on 30th June 2026? Same 20 lakhs. What is the value of the land on September 30, 2026? 20 lakhs. So friends, balance sheet numbers are as on date number. So Ind AS 34 says that whenever you prepare the interim financial statement, okay, means a financial statement for an interim period. Financial statement for an interim period. Sai Kiran, I am asking about that the value, I mean to say whether that land will come or not. The same land will come into that balance sheet or not. That is what I am talking about. If you have opted for a revaluation model, value will change, but whether item will carry forward or not. Whether item will be carry forward or not, right? But if you have given a salary in the last year to an employee, whether that salary will come to this year also if the employee has already left? No, the expenses and income will not. The expenses and income will not be carried forward. Expenses and income will not be carried forward, okay? Right? It is always for the period. So we will be talking about the period separately, but look at the balance sheet. So assets are there, non-current assets, all the non-current asset, all the current assets, okay? All the non-current asset, all the current asset, then total assets, then equity and liability, then equity share capital, other equity, total equity, liability, non-current liability, all the non-current liability, current liability, all the current liability, okay? So then there is a total current liability, okay? Total equity and liability. And then it is signed by a statutory auditor and the entire board of directors, okay? Friends, is it a full balance sheet or is it a condensed balance sheet? Is it a full balance sheet or is it a condensed balance sheet, my dear friends? At the top it is written it is a condensed balance sheet. But sir, it is a full balance sheet. Don't you think it is a full balance sheet? Full balance sheet में फर्क क्या होता है? What is the difference in the full balance sheet and the condensed balance sheet? इसमें difference क्या है? What is the difference? Please tell me. And then I will show you from my eyes, right, that what is the difference between the full balance sheet and the condensed balance sheet. So, Saminathan, Manoj is saying condensed balance sheet and Manoj is saying notes to accounts. Okay. Full value of an year, Ravinder. Balance sheet numbers are as on date number. Balance sheet numbers में कभी भी रविंदर वो नहीं होता full year का value. Balance sheet number तो as on date होते हैं ना. Ravinder, Tata Steel has purchased a land for 20 lakhs in 1950, right? So Ravinder, assuming they have purchased at cost model, okay? sorry, assuming they have purchased it for 20 lakh and assuming they are using cost model, assuming. So Ravinder, what is the value as on 31st March 25, 30th June 25, 30th September 25, 31st March 26, 30th June 26, what is the value of this land? Same. बट रविंदर वो तो फुल ईयर में तो लैंड खरीदी नहीं, फिर आ क्यों रही है बैलेंस शीट में? व्हाई व्हाई इट इज कमिंग रविंदर, व्हाई इट इज कमिंग इन द बैलेंस शीट? हमने तो ईयर में खरीदा ही नहीं ना, लैंड तो खरीदी नहीं, बिकॉज बैलेंस शीट नंबर्स आर ब्रॉट डाउन एंड कैरिड फॉरवर्ड. ओके, राइट. ओके, सो कसक the balance sheet is not full year, half year, no. The balance sheet is balance sheet. It is as on date balance sheet. It is as on date balance sheet. As on date balance sheet. Okay. Taking another example. Mukesh Ambani, Mr. Mukesh Ambani has a net worth of 5 lakh crore on 5 lakh crore on 31st March 2026, assuming. कितनी नेटवर्थ है? 5 लाख करोड़ ऑन 31st March 2026. Mr. Mukesh Ambani has earned 1 lakh crore for the quarter ended June. What is the closing net worth? Mr. Mukesh Ambani has a net worth of 5 lakh crore on 31st March 2026. He has earned 1 lakh crore for the quarter ended June 2026. What is the closing net worth of Mr. Mukesh Ambani as on 30th June 2026? 6 lakh crore, right? It was 5 was earlier, 1 lakh crore he earned, 6 lakh crore is the closing net worth. Okay, so whether this closing net worth, under the closing net worth, whether the 31st March 26 net worth is also included? Yes, of course, yes. Of course, yes. So how much is the net worth? 6 lakh crore. So if I am asking what is on 31st March 5 lakh, what is on 30th June 6 lakh, means this includes 31st March also, means 5 lakh crore numbers are carried forward, brought down. But if I ask you how much Mr. Mukesh Ambani has earned, in the last year he has earned 5 lakh crore, in the current quarter he has earned 1 lakh crore, I am asking how much he has earned in the current quarter, what will you say? 6 lakh crore or 1 lakh crore? 6 lakh crore or 1 lakh crore? How much you will say? Whether Mr. Mukesh Ambani has earned 6 lakh or 1 lakh, it is 1 lakh. P&L is for the period. Balance sheet numbers are as on date, doesn't matter. Balance sheet में कभी full half नहीं होता. Okay, is that clear? Yadav ji and Ravinder ji? Yes? Okay, great, my dear. Sir, then what is the difference, sir? My dear friends, have you seen the deferred tax asset, income tax asset? Have you seen these the notes breakup? Have you seen the notes breakup for many items? No. There are only limited notes. That is number one. And even in those limited notes, the disclosures are limited. Can you see the pages, the number of pages? Are you able to see the number of pages of this interim financial statement? How much are the number of pages in the interim financial statement of Infosys? 32 pages. 32 pages. Do you know what is the full? What is the number of pages in the full financial statement? These are 55 pages. Okay, almost 60 pages, I would say 50 to 60 pages. So friends, if balance sheet is the full balance sheet, kind of, I mean to say, at least from the presentation perspective, it's a full balance sheet, full P&L, full statement of changes in equity, full cash flow, then where is the difference? Where is the difference? The difference is in the notes to account. You can see for every line item, the detailed breakup is not given for every line item. Okay. And even though fair breakup is given, the detailed disclosures are not given. So friends, notes to accounts are the integral part of the financial statement. Notes to accounts are the integral part of the financial statement. And hence, my dear friends, and hence, you know, they are only giving some limited notes. That is why they are calling it as a condensed balance sheet, condensed P&L. They are not explaining the full balance sheet. They are only explaining the limited. They have given the full balance sheet, but explaining the balance sheet item for a limited item only and in a limited manner only. That is why they are calling it as a condensed balance sheet, condensed statement of profit and loss, condensed statement of cash flow, condensed statement of changes in equity. Is that clear to everyone? Is that clear to everyone? So Sai Kiran is asking, sir, one general clarification. All companies, including listed companies, just a minute. All companies, including listed, unlisted, depending on their size, they have to prepare financial statement in 100 lakhs, millions, crores, etc., etc. Yes, you are right. But my doubt is when they are preparing internally financial statement in 100,000 lakhs, millions, crores. So when they are preparing internally internal financial statement, they have to prepare for full digit in rupees. Is my understanding correct? No. So let me tell you how it happens. First of all, you make a journal entry, then you get a ledger, then the numbers flow into the trial balance. Okay. When you are passing entries, when you are preparing, when you are passing entries, okay, when you are doing accounting, it has to be in the full number, full rupee number. Okay. So your trial balance comes in the full rupee number. When the company prepare the financial statement, what they do, either they do the rounding off on the trial balance level, right? From the trial balance, it goes to grouping. From the grouping, it goes to the notes. From the notes, it goes to the balance sheet and P&L and cash flow, etc., etc. So they round off. They round off either at the trial balance level or at the grouping level. But if I tell you, when they pass the accounting entry, it is in the full rupee. When they put the entry in the system, it has to be in the full rupee. Okay. But when they prepare the financial statement and it comes from the grouping, it comes from the trial balance. So they put the rounding off, like we put the rounding off at the trial balance level. We put the rounding off at the trial balance level. Right, Sai Kiran? Okay. So maintenance of books of account is happening at a last decimal of the number, right? In the full number, but it has to be rounded off when it becomes a trial balance. From the trial balance, the flow will start to the financial statement in a rounding off manner. I hope it is clear, Sai Kiran. So this is what practical it is there, right? So my dear friends, I have shown you the balance sheet and I have also shown you that in this balance sheet, this is a September 30, 2021. Yes, income tax reporting purposes, rounding off is not allowed. Rounding off is allowed as per Companies Act only. Okay. For income tax, in your income tax return, you have to give the full number. You have to give the full number. For example, last year, Reliance Industries Limited revenue was 11,76,000 crore. You know, they have written this in the financial statement. They written this number like this: 11,76,000 crore. This is figures in crores, But you know how they write in their income tax return? 11,76,000 crore. This is how they have written in their income tax return. Okay. Clear, Sai Kiran? Shall I move forward? No, Sai Kiran, even the first financial statement can be prepared in as a rounding off also. It can be rounded off basis the that year number. It can be rounded off. Okay. There is no such provision which says that first financial statement has to be in full digit. No. Okay. Guys, now let's go to this is September ended financial statement. Let me clarify. The Infosys financial statement which I am showing you, it is a September ended financial statement. Again, to clarify, there is no provision in the SEBI LODR or Companies Act to publish their interim financial statement on the website. Not mandatory. I have written on the Excel file also. Sir, then from where you get the Infosys financial statement? Infosys, TCS, few IT companies, they are publishing it on their website also. Okay. Is that clear to everyone or not clear? क्या ये सबको क्लियर है या नहीं है? ये वाली बात आपको लर्न करनी है ना, आपको तो समझना ही है ना. Yes. Now, your condensed statement of P&L, you must have seen at many places your breakup is not given. For example, employee benefit expense is given, but actuarial disclosure are not given. Okay. Actuarial disclosures are not given. So since it is a September ended financial statement, you can see they have given the quarter ended September 21 and the corresponding quarter ended September 20. And they have also given it is quarter number, and they also given the YTD number, year to date. 6 months ended September 21, 6 months ended September 20. Sir, the balance sheet comparison was happened with March, but why P&L comparison is apple to apple? Why P&L comparison of why P&L comparison of September quarter is of the September quarter of the last year? 6 month September is the 6 month September of the last year. Why? Because P&L reflect performance. आप पूरे साल से कंपेयर तो नहीं कर सकते ना 3 महीने की परफॉर्मेंस को या 6 महीने की परफॉर्मेंस को. सो P&L reflects performance. It is for the period number. P&L numbers are for the period number. That is why P&L number is always apple to apple. It is always compared with the same period of the corresponding year of the last year. Okay, is that clear? Okay, then statement of changes in equity. Statement of changes means movement. Statement of changes in equity reflects the shareholder performance. Statement of changes in equity is also for the half year only, 9 months, 6 months only. April to September. It is not for the quarter. It is 6 months. Okay, April to September. April to September. You can see that. And cash flow is again the full cash flow, but it is only for the YTD. 6 months ended September, 6 months ended September 20. I'll talk more about it, not to worry. Okay, I'll talk more about it. So now coming back to this condensed set of financial statement, friends, complete set of financial statement we know, condensed set of financial statement we understood. Have we understood or not? Condensed balance sheet, P&L, cash flow, changes in equity, or significant or limited notes to accounts. Yes. So significant or limited notes to accounts I will be covering, but balance sheet, P&L, cash flow, equity we understood. For preparing the condensed set of financial statement, the component of financial statement requires the presentation of major headings and subheadings of the last annual financial statement. For preparing the condensed set of financial statement, the component of financial statement requires for preparing the condensed set of financial statement, the component of financial statement requires the presentation of major headings and subheadings of the last annual financial statement. Sir, in disclosures, why opening balances were not written as audited and current balances as unaudited? Is Infosys quarterly? Yes, Manoj, I told you na, Infosys, TCS, they are audited. They are always audited. Like Bharti Airtel is audited. Like TCS is audited. Tata Motors, Tata Steel is audited. Right. Hindustan Unilever probably unaudited. Reliance unaudited. Indigo Airlines unaudited. Okay. Yes. If unaudited, we have to mention unaudited. You're right. Yes. So friends, standard says that when you are preparing the condensed balance sheet, you have to maintain the major heading and subheading. You have to maintain the major heading and subheading just like your last annual financial statement. Just like your last annual financial statement. Okay. Clear? Now, whether comparative period is required in case of condensed financial statement. Whether comparative period is required in case of condensed financial statement or in case of interim financial statement. So it is one and the same thing. In case of interim financial statement, whether comparatives are required. Yes, it is mandatory. Yes, it is mandatory. Now, so whatever we have discussed so far, we have understood with a real life example, the difference between the full set of financial statement and the condensed set of financial statement. And the condensed set of financial statement. My dear friends, now we need to understand that if a company is preparing the interim financial statement, what are the comparative periods which are required to prepare the interim financial statement? Okay. Now let's discuss with the help of an example. Let's discuss with the help of an example. ABC Limited is preparing its condensed interim financial statement for the period ended 31st December 2025. 31st December 2025. Suggest the comparatives for these financial statements. Suggest the comparatives for these financial statements. Okay. Balance sheet is always prepared as on date. So if the financial statements are for the period ended 31st December 25, tell me balance sheet date is what date? As on which date? Balance sheet date is as on which date, my dear friends? Simple है ना यार, 31st December 2025. So balance sheet current period is 31st December 2025. Yes, यही होगा ना? 30. What is the comparative? For which period comparative balance sheet has to be given? Yes, the last year end audited balance sheet. Charita Reddy, I told you, for balance sheet, it has to be the last year end audited balance sheet. 31st March 2025. What is the last year end audited balance sheet prior to 31st December? 31st March 2025. 31st March 2025. Okay. What about P&L? P&L has to be prepared for the quarter, FTQ for the quarter, right? Which quarter? Which quarter? Starting from October 1, 2025 to December 31st, 2025. I hope you are okay with this. October 125 to December 125. Yes. What is the comparative quarter? What is the comparative of this? What is the comparative of this October 125 to December 25, October to December? What is the comparative period? Yes, Q3 24-25. Very good. It is October 1, 2024 to 2024. Yes. Yes. Okay. So basically it is Q3. It is Q3 24-25. Okay. And it is oblique. What we can say? Oblique. We can say Q3 24-25. Right. And here what we can say? Sorry. Q3 25-26. Right. 25-26. And here we can say Q3 24-25. Can we say that? Can we say that? Yes. Okay. Now, the P&L is required to be given for the quarter as well as YTD, year to date, as well as YTD, year to date. What is meant by year to date? YTD, year to date, means 1st April full, 1st April to 1st April 25 to December 31st December 2025. Okay. Oblique 9 months ended 31st December 2025. Right. What is the comparative period? What is the comparative period? The comparative period is 1st April 24 to 31st December 24. And what is 9-month period ended 31st December 2024? My dear friends, tell me why this P&L is for the quarter and year to date, because this is also required as per the SEBI LODR regulation. Whenever, for whatever quarter you are presenting, SEBI LODR regulation requires you to present the current quarter as well as year to date, and of course corresponding so same quarter of the corresponding year, corresponding quarter of the last year, and the corresponding year to date of the last year. Friends, any doubt so far? This is the requirement of Ind AS 34. Are you able to understand and learn it or not? याद रहेगा नहीं रहेगा आपको? Yes. Friends, what about statement of changes in equity? It is again a movement statement, whether it is required for the quarter and year to date both or only year to date. This is required only year to date. And friends, let me tell you, statement of changes in equity is never presented as a part of the financial results. It is not required by SEBI LODR. Okay. So what is my statement of changes in equity? 1st April 25 to December 25, or I can say that 9-month ended 31st December 25. What about my cash flow? It will also be YTD. Okay, year to date. Quarterly cash flow is not required as per SEBI LODR regulation. Right? What about notes to accounts? Notes to accounts as per the period mentioned above. Okay. Any doubt? Any question? Any problem? Any gila shikwa? Yeah. Please let me know. If you have any doubt, any question, any problem, any gila shikwa, please let me know. I hope it is okay to everyone. Yes or no? Clear? Sir, now let's do another example. ABC Limited is preparing its condensed interim financial statement for the period ended 30th September 2025. Suggest the comparative for these financial statements. Tell me quickly. बताइए, फटाफट बताइए. Balance sheet. Balance sheet is for which period? This is 30th September 2025 financial statement. 30th September 2025 financial statement. Balance sheet is for which period? September 30, 2025. Corresponding, what is my comparative period for balance sheet? Yes, the March 31st, 2025. Very good. What is my P&L? Tell me my period of P&L. What is my quarter P&L? Not Q3, Q2, Manoj. This is September. Manoj, it is September Q2. जुलाई टू यार आप डेट सिर्फ आप डेट याद रखो ना, जुलाई 25 टू सितंबर 25, राइट? एंड हियर इट इज जुलाई 24 टू सितंबर 24. इज इट वेरी डिफिकल्ट? इज इट वेरी डिफिकल्ट? साल में 12 महीने होते हैं, इन 12 महीनों में 4 क्वार्टर होते हैं, हम फाइनेंशियल ईयर फॉलो करते हैं. इन फाइनेंशियल ईयर में ओके, यू आर यूएई बेस्ड. ओके, अंडरस्टूड. So Manoj, from the Indian perspective, from the UAE perspective, it is, yes, you are right. But from the Indian perspective, it is a second quarter. Okay. So that is why I'm writing the dates also. I'm not only writing quarter, I'm writing dates also. Okay, Manoj. So July to September 25, July to September 24. Correct, Manoj? Then Manoj, what about YTD? What about YTD from the Indian context? It is April to September 25. Okay, 6 months. And this is April to September 24. April to September 24. Okay. April 25 to September 25 and April to September 24. Clear? This is 3 months. This is 6 months. Okay. Now YTD. So see, statement of changes in equity has to be YTD always. So same April to September 25, April to September 24. Cash flow has to be YTD always, April to September 25, April to September 24. And then it has to be as per above P. FTQ is for the quarter, YTD is year to date. Right now, let me ask another question. 30th June, ABC Limited is preparing the condensed interim financial statement for the 30th June 2026. Now, 30th June 2026. Suggest the comparative. Suggest the comparative. Balance sheet. So, Manoj, as per IFRS and as per Ind AS, it is not allowed. In your cash flow statement, it should not be given for the last audited, given last audited for comparative. I have not understood, Manoj. It will be great if you will give me the example of the period which you are covering in your interim financial statement. I'm not able to understand what you are trying to say. Okay. Yes, friends, what is the current period? What is the current period? 30th June 2026. Okay. What is the comparative period? 31st March 2026. Okay. PNL for the quarter and YTD. So PNL is for the quarter and YTD. Tell me, what is my PNL for the quarter? April 26 to June 26. Yes. Now what is my YTD P&L? What is my YTD P&L? Same. So in the first quarter, you are absolutely right. In the first quarter, your for the quarter in YTD will be the same. Okay. Same ही होगा ना? It has to be same. April 25 to June 25. Okay. Then SOCI. What about statement of changes in equity? It has to be YTD. ये YTD कौन सा नंबर? April to June. YTD means from the beginning of the year till date. So April to June. What about cash flow? April to June. Okay. So this is for June quarter. So friends, I have covered all the quarters. I have covered if the financial year, if the financial period will be ended 31st December, what will be the comparative, what will be the current period? If it is September, what will be the comparative, what will be the current period? If it is June, what is the comparative, what is the current period? So I have covered all the aspect. I have covered all the aspect here. Okay. And I will share this Excel file with all of you. I hope you found it useful, right? So Manoj is saying we have recently filed Q2 2026. Q2 means Manoj, you are saying June, right? Because you are following calendar year. And in CFS of interim financial statement, comparative December 25 is given. CFS means cash flow, Manoj. Are you saying consolidated or cash flow? Cash flow. So for June, you have given December 25, Manoj, which is not correct. H per IFRS and H per Ind AS 34, right? If it is a interim financial statement, so Manoj, if you have complied with IFRS, which is IAS 34 or Ind AS 34, of course in Dubai, in UAE, IFRS is applicable, IAS 34 is applicable, right? H per IAS 34 you can't do that. I don't know how can you did that, but but it is not allowed because there is no difference between Ind AS 34 and IAS 34. Okay. Yes. So friends, I hope with this you have understood this period of interim financial statement. Are you clear or not clear? Now tell me. Yes, you are clear? Okay. Great. Great. Absolutely great. Okay. So friends, we talked about the comparative. Yes, comparatives are mandatory, and I have given you all the examples in the file also. Let me write the interim period example. Okay, right? With this, you have covered all the interim period exam. Now let's come to the important aspect, notes to accounts. Friends, are we giving full notes to accounts in our condensed financial statement? No, we are not giving full notes in our condensed financial statement. We are only giving significant or limited notes in our condensed financial statement. Friends, what is meant by significant means the notes which are material, material in terms of their size or nature. Okay. Okay. So significant means material. Limited means mandatory. Some other notes are also there. Whether it is material, immaterial doesn't matter. You have to provide it. You have to disclose it. Okay. Mandatory disclosures. Okay. Other disclosures means mandatory disclosures. Okay. So we will discuss two type of notes. Number one, we will discuss material type of notes and we will discuss the mandatory notes which are required to be provided in every interim financial statement. Okay. So friends, this list is given. Friends, I am covering this entire standard in Excel file. Why? So that you will have a complete checklist of this standard. Okay. So significant events and transactions. Notes relating to any significant events and transactions required to be disclosed in the interim financial statement. My dear friends, while the standard has given you around 13 disclosure, 1, 3, 13, right? But sir, whether this is an exhaustive list or this is an inclusive list, this is an inclusive list. This is not an exhaustive list, right? But yes, these are, if these items are there, these are mandatory to disclose. Okay. Now, what is the first item? Write down inventory to NRV or reversal of impairment of inventory. My dear friends, if there is any, you know that inventory has to be measured at cost or NRV, whichever is lower. Cost is 100, NRV is 80. You have to do the impairment of 20. So if there is any impairment of inventory, okay, or there is a reversal of impairment of inventory, you have to disclose it in the notes to accounts of interim financial statement. Friends, the company's balance sheet size is 10,000 crores and there is an impairment of inventory of 1 crore. Whether this disclosure is mandatory? Whether this disclosure is mandatory, impairment of inventory. The company balance sheet size is 20,000 crore, inventory is 5,000 crore. There is 1 crore rupees of impairment of inventory. Whether this disclosure is mandatory in interim financial statement. In annual financial statement, it is required. So Manoj and Saminathan saying no. They are saying this disclosure is required only when it is material. It is not a mandatory disclosure in interim financial statement. This is required only when it is material, right? Right. And this impairment and reversal is governed by Ind AS 2. Okay. I have also written the name of the standard. Why? Why I have written the name of the standard in every item? Why? Because my dear friends, this Ind AS 34 is a disclosure related standard of interim financial statement. Interim financial statement, be it interim financial statement or be it financial statement, it covers all the item. For example, it covers PP&E, it covers financial instrument, it covers intangible asset. But have you covered those items? Have you covered the standards of on PP, intangible, on financial instruments? Not yet. It will be covered later on. Revenue, leases, it will be covered later on. That is why I have put down the name and title of the standard, name, the number of the standard. Okay, because many items you will not be able to understand what is the meaning of that item. But what you need to understand here, that these are the disclosures, my dear friends. These disclosures are required. Okay, you will be able to understand these items, right, when I will cover these items in the respective standard. Is that clear? अगर मैं सारी आइटम कवर करने लग गया तो ये 8 घंटे लग जाएंगे और आपको समझ भी नहीं आएगी सारी आइटम. ओके, कुछ आइटम, बिकॉज सिंस यू आर अ सीए फाइनल स्टूडेंट्स, few items you are able to understand it beautifully, like inventory, NRV you understand because you have read this in CA Inter also. Cost or NRV, whichever is lower. Yes or no? Second is impairment of financial asset as well as non-financial asset. For example, you have impaired, you have created a provision on your trade receivable, debtors, okay, financial asset, or you have also charged impairment loss on your investment property, PPE, intangible asset. So if there is any impairment of financial and non-financial asset, as per Ind AS 109 and Ind AS 36, which I am going to take with all of you. So that impairment, if it is material, it is required to be disclosed in the notes to account. Reversal of any provision for restructuring. Reversal of any provision for restructuring, right? So friends, when you read Ind AS 37, provisions, contingent liability and contingent asset, so there is a concept called restructuring provision. You have to create a restructuring provision. So if there is any reversal of restructuring provision in any interim period, any quarter, the disclosure is required if the quantum is material. Okay. Acquisition and disposal of PP, addition and deletion of fixed asset as per Ind AS 16. Okay. Addition and deletion of fixed assets are required if it is material in nature. Okay. Capital commitment. You understand capital commitment? What is capital commitment? What is capital commitment? Do you understand capital commitment? Do you understand it? Capital commitment. For example, you have given a purchase order to a company for purchasing, let's say 20 aircraft. You have given a commitment to the company, given a purchase order to a airline company for buying 20 aircraft. Only one aircraft has been delivered. 19 aircraft has not yet been delivered. So the value relating to 19 aircraft will come into the purchase, come into the capital commitment. Okay. Okay. Right. So purchase of capital items. So if there is any capital commitment which is material in nature, it is required to be disclosed. Sir, if there is a capital commitment which is not material and the company is preparing annual financial statement, will it be required to be disclosed? Yes. In annual financial statement, all these impairment, everything is required to be disclosed. I am talking about only in the interim financial statement. Are you getting me? Don't get confused with these disclosure in the annual report, annual financial statement. No. So these are not applicable for annual. These are only applicable for interim. Right? This concept is only applicable for interim. So we discussed this. Litigation settlement, my dear friends. If a litigation was going on and company has settled the litigation, material litigation, it is required to be disclosed in the interim notes to accounts. Contingent liability and contingent asset. Friends, a company is a big company, billion-dollar company. So they got an income tax demand for 5 lakh rupee. Is it mandatory to disclose this contingent liability? Is it mandatory to disclose this 5 lakh demand of contingent liability? Their balance sheet size is 20,000 crore. Their P&L is profit is 500 crores. This 5 lakh demand is not material and hence it is not mandatory. So contingent liability and contingent assets are required to be disclosed when it is material. Correction of prior period error. Sir, in the current quarter, we were able to know that this error pertains to the last quarter. Right? Saminathan, litigation settlement means your contingent liability has come to an end. Contingent liability means the case is undergoing or the case has started. The dispute is undergoing or dispute has started. But settlement means dispute has come to an end. Okay, right? So friends, correction of prior period errors. Correction of prior period error. Okay, prior period error. So correction of prior period error. If there is a prior period error, it is also required to be. All the disclosures of prior period error and all those correction of prior period error you are required to take in the interim financial statement. Okay, like I told you in Ind AS 1 and Ind AS that all those disclosure requirements are there in Ind AS 34 also. Changes in the business oblique economic environment which has an impact on the fair value of the financial asset or liability. Yes, third balance sheet is required to be given. You are right, Manoj. Third balance sheet is required to be given if required in case of correction of prior period errors. Okay. Changes in the business oblique economic environment which has an impact on the fair value of the financial asset or liability. Any default in the loan covenants. If there is any default in the terms and condition of the loan, it is required to be disclosed. Related party disclosure, sir. Name of the related party transaction. Name of the related party, relationship with the related party, transaction and outstanding balances with the related party is required to be disclosed. Okay. Related party disclosure are required to be given. Changes in the classification of financial assets and liabilities. If there is any changes in the classification of the financial assets and liabilities, as per Ind AS 109, it is required to be disclosed. For the time being, just remember changes in the classification. You will able to understand when you read Ind AS 109. There are 3 classification to asset and 2 classification to liability. I'm just telling you. For asset, it is amortized cost. It is fair value through other comprehensive income and fair value through P&L. These are the 3 classification of financial asset, and there are 2 classification of financial liability, amortized cost and fair value through P&L. If there is any changes within these classification, it is required to be disclosed. What is meant by these items, you will be able to learn in Ind AS 109. Transfers. Transfers between the input hierarchy in the financial assets or liability. Friends, in Ind AS 1133, you will be able to learn about level 1, level 2, level 3. Okay. Level 1, level 2, level 3. Okay. So what is the input hierarchy? What is the input hierarchy? You will be able to understand if there is any transfer of the, if you are doing a fair valuation of any asset or liability, financial asset or liability, and earlier it was level 1, now it has moved to level 2. Okay. So this is also required to be disclosed. So friends, these are the disclosures which are required to be given in as far as notes to accounts, which are required to be given only if these disclosures are material. Only if these disclosures are material. Is that clear? Is that clear? Right? I hope it is clear to all of you. Great. Great, my dear friends. Absolutely fantastic. Okay. So now we are going to discuss the other disclosures, mandatory disclosures, okay, or I would say other disclosures, okay. So before that, friends, let's have a break. It's 8:27 now, okay, and let's have a break till 8:40, 13 minutes, okay. We'll start at 8:40 with the other disclosure part. Shall I start? Yes. So friends, we discussed that these 13 disclosures are required, and of course, in addition to these 13 disclosures, if any item which is material or significant, that is also required to be disclosed in the interim financial statement. Now, coming to the other disclosure, which are mandatory disclosures. Okay. So friends, standard says that instead of giving a full accounting policy in every interim financial statement in the notes to accounts, what you can do, you can simply write a fact, simply write a statement that the same accounting policy or method of computation is followed in the interim financial statement as in the last annual financial statement. Okay, as in the last annual financial statement. Okay. So friends, you are not required to repeat all those 15-20 pages of accounting policy. No, you just need to write a fact that the same accounting policy or method of computation is followed in the interim financial statement in comparison in the interim financial statement as it was published in the last annual audited financial statement. Okay, right? If there is any change in accounting policy or any method of computation, if there is any change in accounting policy or estimate in comparison with the last annual audited financial statement, then that change in accounting policy needs to be disclosed. That change in accounting policy needs to be disclosed. Otherwise, you just need to write a fact, a statement that the accounting policy for the quarter ended or for the interim period ended June 30, 2026 are the same accounting policy what was covered in the last annual financial statement for the year ended 31st March 2026. That's all. Okay. Is that clear? Is that clear? Yes. For example, Rohan Limited. Rohan Limited has prepared and published its year-end FS the for 31st March 2026. Now they are preparing the interim FS for the quarter ended June 30, 2026. Their annual financial statement was huge. So their annual financial statement was huge, right, in terms of size, and it includes, and the notes to accounts includes 20 pages of accounting policies. In the interim FS, the company has decided to prepare condensed interim FS for June quarter, and there is no change in the accounting policies after March. Please advise whether the full policy is required to be given in interim FS. बताइए क्या करना है? What we need to do? No. In condensed interim, Just a minute. No. In condensed interim FS, full policy is not required, right? Only a statement, the company Rohan Limited should make this statement, should capture this statement in the notes to accounts. Which statement? That the accounting policy for the preparation of interim financial statement for the quarter ended June 30, 2026 is on the same basis as was presented in the year ended March 31st, 2026 full FS. Is that clear? Is this clear? Rohan, is this clear? Yes. Manoj, Rohan, Sai Kiran, Saminathan. Yes, Charita. Okay. Explain. So the first we understood, we are not required to give the full 20 pages. We are only required to give the statement, and if there is any change, we have to capture that change. That's all. Okay. Explain the seasonality or cyclical nature of operations in the interim financial statement. Friends, example. What is the example? Example. Sugar industry. You understood cyclical and seasonal nature of operations? Sugar industry. Okay. So friends, if the company, the business model or the company or the product of the company is seasonal or cyclical nature of the operations, if the company is having a seasonal or cyclical nature of the operation, it is required to be disclosed, right? What you need to disclose? The company operates in a seasonal or cyclical nature of operations of the seasonal and cyclical nature of operations. But so the company has a seasonal or cyclical nature of the operations. The company operates into the manufacturing of sugar, okay, and it is having a seasonal or cyclical nature of operations. That's all. Exceptional item, friends. If any exceptional item is there, it is required to be disclosed, right? So what we are discussing right now, we are discussing other disclosure, means mandatory disclosure we are discussing, right? So accounting policy we discussed, explain the seasonality or cyclical nature of operations in the interim financial statement. Exceptional item we need to disclose. Nature and changes in estimate from last interim period or last annual period. In the last interim period or last annual period, we have taken a provision of warranty of 5% of the sales. Now we have increased it to the 7% of the sales. So friends, this change in estimate is required to be disclosed. In the current quarter, you have changed the useful life of the fixed asset because now you have identified that the remaining life is not 10 years, it is only 7 years, right? So there is a change in estimate. There is a change in estimate, so it is required to be disclosed. Issue, purchase or repayment of equity and debt security. If there is any change in the capital structure, the issuance of the debt, share capital, purchase, repayment of equity and debt, this is required to be disclosed. Dividend paid or declared, it is required to be disclosed. Segment information, the segment reporting has to be done. Segment asset, segment liability, segment revenue, segment expenses. Friends, if you see these items, you know, these items are coming from the disclosure which is required in the SEBI LODR regulation. Like SEBI LODR regulation says that if there is any dividend paid or declared, it has to be disclosed in the notes to the results. Okay. If it is a seasonal or cyclical nature of operation, it is required to be disclosed in the notes to the results. Exceptional item has to be disclosed separately. The accounting policy changes has to be shown separately, right? So all these items, segment reporting, okay, many, I will not say every item, many of the items are part of the results, part of the notes to the results also, okay. Events occurring after reporting period. My dear friends, what is meant by event occurring after reporting period? We discussed in the last class. It is from the reporting date to after the reporting date to the approval of the results date, approval of the interim financial statement date also. For example, the company has prepared the financial statement for the quarter ended or financial results for the quarter ended June 30, 2026. The board meeting is on 25th of July. What is the event occurring after reporting period? So I mean to say, what is the post reporting period? Which events of which period will be covered in this? So from 1st of July to 25th of July, right? From 1st of July to 25th of July. Okay. So if there is any events, adjusting event, non-adjusting event, if it is adjusting event, it has to be adjusted in the interim financials. If it is non-adjusting event, it has to be disclosed in the interim financial statement, right? If there is any business combination, there is a merger and acquisition which happened, right, during the quarter, there is loss of control in subsidiary. Earlier, the company was having 70% stake in a subsidiary. During the quarter, the company has sold out 30% stake, right? So there is a loss of control in subsidiary and discontinued operations, okay? So these are also required to be disclosed irrespective of the size. Fair value disclosure of the financial instrument, okay? If an entity become investment entity or it ceases to become an investment entity, my dear friends, you will read the concept of investment entity, right? In Ind AS 110, you will read the concept of investment entity in Ind AS 110, right? But from the disclosure perspective, in interim financial statement, if a normal entity becomes an investment entity or investment entity becomes a normal entity, you are required to disclose this fact in the interim financial statement. Disaggregation of revenue from contract with the customer. Disaggregation of revenue from contract with the customer. Friends, so in your P&L, you have a one line item, revenue from operations. Now, in the revenue from operation, what is my sale of goods? What is my sale of services? What is my other operating revenue? This disaggregation is also required to be disclosed in the notes to the interim financial statement. Okay. Friends, any challenge in understanding these mandatory disclosures? Any challenge in this disclosure? Yeah. Of course, you have to learn this disclosure, right? So if you're not able to understand what is investment entity, not to worry. You will be able to understand. These are the financial statement standard. तो फाइनेंशियल स्टेटमेंट में तो सब कुछ आ जाता है, ओके, बट आप पढ़ोगे तो स्टैंडर्ड वन बाय वन. ओके, एनी डाउट, एनी चैलेंज अप टू दिस लेवल, एनी प्रॉब्लम अप टू दिस लेवल? We'll discuss multiple choice question also. We'll discuss, the study mate questions also. We'll discuss lot of questions, not to worry. Okay. Friends, you remember I talked about a para number 16 of Ind AS 1. मैंने बताया था आपको explicit and unreserved statement of compliance. So friends, disclosure of compliance with Ind AS in interim financial reporting. Okay. Disclosure of compliance with Ind AS in interim financial reporting, right? So friends, in your interim financial statement also, you have to give a statement of compliance. You have to give an explicit and unreserved statement of compliance. You have to give an explicit and unreserved statement of compliance, right? You have to give an explicit and unreserved statement of compliance of all applicable Ind AS in preparation of the interim financial statement, okay? So we discussed the significant or limited notes to accounts. Now, my dear friends, this standard gives some principle of measurement and recognition also. This standard gives some principle of measurement and recognition in interim financial statement. This standard gives you, right, some principle of measurement and recognition. Now, the first principle is materiality. Now, what is this principle? Let's understand with the help of this example. The company's policy is to consider 5% revenue as a materiality threshold, right? So what is the company policy on materiality? The company's policy is to consider 5% revenue as a materiality threshold. The full year revenue is 1000 crores. The company is preparing the interim financial statement for Q1, financial year 24-25, for which revenue is 300 crores. Please advise whether an item of income or expense of 20 crore will be material in Q1 interim financial statement. The company's policy is to consider 5% of revenue as a materiality threshold. Full year revenue is 1000 crore. So what is the materiality for full year? 1000 multiplied by 5% comes out at 50 crore. Yes, 50 crore is the materiality for full year. But the company is preparing the interim financial statement for Q1 24-25, for which revenue is 300 crores, right? What is 5% of 300 crore? What is 5% of 300 crore? 15 crore. Please advise whether an item of income or expenses of 20 crore will be material in Q1 interim financial statement. Friends, so let's take this as a revenue is 2000 crore. Okay. What is 5% of 2000 crore? What is 5% of 2000 crore? 100 crore. Now the quarter revenue is 300 crore. What is 5% of 300 crore? 15 crore. And an item of income or expense of 20 crore is there. So will that be considered as material in Q1? So the question is whether you need to see the materiality from that period perspective, or for considering the materiality you will consider from the full year perspective. You have to consider the materiality for the period for which you are preparing the financial statement. For the period for which you are preparing the financial statement. Okay. For the period for which you are preparing the financial statement, right? Clear, my dear friends? Is that clear? Yeah. Yes, this item is material because materiality threshold has to be seen from the interim period numbers only, not the full year number. In Q1, the materiality threshold is how much? 10%. 10% of in this quarter. Just a minute. Right. So in the company's previous, so whether an item of income or expenses of 20 crore will be material in Q1, the materiality threshold is how much? 10%, which is 30 crore. Okay, which is 30 crore. That is 30 crore. Just a minute. That is 30 crore. Okay. Oh, my bad. Sorry, my bad. It is not 10%, it is 5% only, right? I think this is right. Okay. Okay. Hence 20 crore number will be material for Q1. Is that clear? Is that clear? My bad. It is 5% only. I don't know, in back of my mind 10% was going on. I don't know from why. Okay. Clear? So materiality you need to look at from the period perspective, from that period perspective. Okay. Same accounting policies as annual, except there is a change after annual financial statement. Friends, like, you know, like I told you, if there is a same accounting policy, you have to follow the same accounting policy. Okay. In the interim financial statement, what you have followed in the annual financial statement. If there is a change after annual financial statement, it has to be applied prospectively, or as per Ind AS 8. Okay. Or as per Ind AS 8. You remember I told you in Ind AS 8, if the change in accounting policy is due to a new Ind AS, you have to apply the transition provision. Okay. I told you, na? Okay. Or if it is a voluntary change, you have to apply retrospectively, or the transition provision is not there, you have to apply retrospectively. Okay. So same accounting policy has to be applied. If there is a change after annual financial statement, that change has to be taken here. For example, till March 2019, till March 2019 annual financial statement, Ind AS 17 was applicable on leases, but with effect from 1st April 2019, Ind AS 116 was applicable. Friends, on leases, the standard was changed effective from 1st April 2019. Okay. So companies have given the lease accounting policy as per Ind AS 17 in annual accounts of March 19, but for interim period for June 19, they have applied Ind AS 116. They have applied Ind AS 116. Okay. Right. Revenue. If the revenue is seasonal, cyclical, or occasional, the revenue has to be recognized in the interim period in which it occurs. For example, the company is into the woolen business. Now, quarter 1 revenue is 10 crore, quarter 2 is 10 crore, quarter 3 is 100 crore, quarter 4 is 100 crore. What is the total revenue? 220. So, the company knows that I will be able to earn this kind of revenue in these quarters. So, whether the revenue has to be recognized in this manner or 220 divided by 4, 55 crore. So, whether revenue has to be extrapolated, revenue has to be, recorded on a straight line basis, or revenue has to be recorded in the period in which it occurred. Revenue has to be recorded in the period in which it occurred, right? It cannot be straight line basis. So you are not required to recognize a revenue of 55 crore every quarter. Okay, it has to be the amount in which it occurred. That is why, so in quarter 1 only 10 crore, in quarter 2 only 10 crore, but quarter 3, quarter 4 10 times. So that is why you have to write that your industry, your operations are seasonal or cyclical in nature. That is why you need to write. Okay, that is why you need to write this. Is that clear? Any doubt? So materiality has to be considered for the period for which the financial statement has to be prepared. If it is the same accounting policy as annual, you have to just write a fact. Otherwise, you have to change. If it is changed after annual financial statement, you have to give the new accounting policy. Okay, and you have to apply the new accounting policy. If revenue is seasonal, cyclical, or occasional, you have to record the same revenue. You have to record the same revenue which is incurred in that quarter. Okay. Impairment in interim financial statement, my dear friends, very, very important. Friends, let me give you a simple, principle. While you must be aware about it, you will be able to know it when I discuss Ind AS 36, impairment of asset. But let me tell you, if goodwill has been impaired, you had a goodwill and goodwill has been impaired. Okay. So due to the situation, the company was not performing well and the company has impaired the goodwill. But subsequently, the company has picked up. Okay. The company's performance is absolutely amazing. So whether the impaired goodwill can be reversed subsequently, in accounting standard it can be reversed, but in Ind AS, goodwill once impaired cannot be reversed. So impairment of goodwill cannot be reversed. It is prohibited as per Ind AS 38, intangible asset. It says that the reversal of impairment of goodwill is considered as a creation of self-generated goodwill, which is not allowed. I hope this aspect is clear to you guys. I hope this aspect is clear to you guys. Yes. So goodwill once impaired, it cannot be reversed. Manish, is that clear? Manoj, is that clear? Sai Kiran, is that clear? Ravinder, Rohan, Almas, Banu, Charita, Kasak Yadav. Yes. Salendra. Goodwill once impaired, it cannot be reversed in future. Okay. Other than goodwill, if there are other intangible assets, if there is a property, plant and equipment, fixed assets, so once it is impaired, it can be reversed. The impairment can be reversed. Okay, subsequently. Now, what is the guidance which is given in Ind AS 34? Let me tell you. Friends, in the quarter 1, there is a goodwill of 100 crores. In quarter 2, this goodwill will become 0. Why? The goodwill is impaired in quarter 2 because due to the losses incurred in the subsidiary, but in quarter 3 it got picked up and subsidiary got huge orders in Q3. So in quarter 2 you made this goodwill as 0. You impair this goodwill. In quarter 3, should I reverse this impairment in quarter 3? Answer is no. Goodwill once impaired, it cannot be reversed even in the subsequent quarter of the same year. You know why this guidance came in Ind AS 34? you know what people were doing? So people were saying that Ind AS 38 and Ind AS 36 says that goodwill once impaired cannot be reversed. Goodwill once impaired cannot be reversed. Okay, right? Goodwill once impaired cannot be reversed. So what people are thinking, people are thinking that it is talking about when goodwill is impaired in 1 year, it cannot be reversed in the next year. But what people were doing, if a goodwill is impaired in a quarter, so they were restating the goodwill in the next quarter because they are saying it is in the same year. It is in the same year. But my dear friends, when you prepare the interim financial statement, you are preparing the interim financial statement by applying all applicable standards, right? You are preparing interim financial statement on accrual basis. Every period is an individual period, a separate period, right? So if Ind AS is applicable on interim financial statement, all Ind AS is applicable on interim financial statement, right? So of course the recognition measurement conditions of those Ind AS will be applicable. Each period is an individual period, right? Each period is an individual period. So that is why the standard has clarified that even though if goodwill is impaired in any interim period, it cannot be subsequently reversed in the another interim period even of the same year. Okay. So this is what guidance has been given in the Ind AS 34 and it is also there in IAS 34, right? PP, property, plant and equipment, property, plant and equipment. So it was 100 crores. There was a 20 crore impairment was there. 20 impairment has been charged in Q2, but in Q3 the value of the PP got increased beyond the earlier carrying value. So in quarter 3 it was reversed. So you can see that. Goodwill impairment recognized in interim period will not be reversed in the subsequent interim period even of the same year. Item other than goodwill impairment recognized in one interim period will be reversed in another interim period if situation is favorable. If situation is favorable. Okay. Clear? Items other than goodwill. Okay. And it is goodwill will not be reversed. Is that clear? Okay. Now friends, the last concept of Ind AS 34, then we'll do a lot of questions. Very, very, very important concept. And if the question from Ind AS 34 will come with some complexity, believe me, this question will always be there relating to income tax measurement. Okay. Relating to income tax measurement. Friends, Ind AS says that income tax for the interim period is recognized or measured on the basis of best estimate of weighted average annual income tax rate for full year. Now tell me, what is the problem? What is the guidance? Friends, you have a brought forward loss of, let's say, 100 crores. You have a brought forward loss of 100 crores. You prepare your first quarter results. And you got a profit of, let's say, you got a profit of 100 crores in the first quarter results. So tell me, will you create a provision of tax or will you not create a provision of tax? You earned a profit of 100 crore, you have a brought forward loss of 100 crore. In the quarter 1, you earned a profit of 100 crore. Will you create a provision for tax or will you not create a provision for tax? Tell me. Manoj and Manish is saying will not create. Why? Because probably you are saying that, see, my brought forward loss is 100 crore and my profit is 100 crore for the quarter. This will be offsetted and my tax liability is 0. This is what you are saying, right? यही बोल रहे हो ना आप? Okay, everyone is saying yes. Manish is also saying yes. Now, my dear friends, tell me whether income tax is a quarterly matter or income tax is an annual matter. Are you filing? Ravinder is saying tax is on annual basis. Are you filing your income tax return on a quarterly basis or annual basis? You are filing your income tax return on annual basis, right? Right. So in the first quarter, it is 100 crore. Probably in the next 3 quarters, if the company will earn 500 crore, then the total profit will be 600 crores. So friends, Manoj, just hold on. You will be able to understand. Okay. Advance tax is what? it's more like you are paying a tax. And advance tax, when you are computing advance tax, you are not computing on a quarterly basis. What you are doing, you are taking the current period number for a quarter, for example, plus 9-month forecasted number. You are also computing advance tax on a full year, not on a quarter. Okay. So how you compute your advance tax? You are projecting what is my full year income. Then you are applying 15%, 45%, 75%, 100%, whatever is the rate. Okay, right? So friends, tell me, this 100 crore of loss, brought forward loss, whether this loss has to be adjusted only from the current quarter profit, only from the current quarter profit? No, this has to be adjusted from the full year profit. This has to be adjusted from the full year profit, right? So don't you think in the first quarter you earned 100 crore, you make a provision for tax as 0. In the next quarter again, 100, 100, 100. I am assuming every quarter you will earn 100 crores. So in the next quarter, when you earn 100 crore, you will create a provision of 30 crore, assuming tax rate is 30%. So whether these numbers will be comparable? Answer is no. And my dear friends, this provision, brought forward loss was not confined to only quarter one. It was related to the full year. It was related to the full year, right? So friends, saying this thing, it is not right. It is absolutely not right. Okay. So that is why one of the guidance has come in Ind AS 34, which says that income tax expense for the interim period is recognized or measured on the basis of best estimate of the weighted average annual income tax rate. Weighted average annual income tax rate for full year. So we will discuss two examples on this aspect. Example number 1 from Mr. Alok Garg. Example number 2 from the ICAI BOS material. Right? Friends, assuming in the quarter 1 profit before tax is 100 crore. Assuming in the quarter 1 PBT was 100 crores. Okay. And my dear friends, the brought forward loss in the quarter 1 was 400 crores. And the 9-month estimated profit is 900 crores. So Manoj, whenever companies do the advance tax calculation, this is how they do the advance tax calculation. What is my current quarter profit, or whatever period has already been passed? What is the actual profit plus what is the remaining profit? What is the actual profit plus what is the remaining profit? Okay, remaining profit means projected profit for the remaining period of the current year. Okay, so 1000 crore is the total expected profit for the full year. Brought forward loss is 400 crores. Tax rate is 25% given in the question. Okay, now what I need to do? I need to compute what is my total expected annual income, Manoj. What is my total expected annual income? 100 plus 900. What is my brought forward loss? 400. What is my estimated annual taxable income? What is my estimated annual taxable income? If 1000 I'll earn, 400 crore is my brought forward loss. My estimated annual taxable income is 600 crores. My tax rate is 25%. So Manoj or Saminathan, Ravinder, how much I'll pay in the full year? How much tax I have to pay? 150 crore. This tax is 150 crore, right? So my dear friend, what is my weighted average annual income tax rate? Tell me, what is my weighted average annual income tax rate? I am paying 150 crore. I am supposed to pay 150 crore over 1000 crore. Manoj, it is not 150 divided by 600. फिर तो वो 25% आ ही गया ना. Manoj, what is my total income? Annual income, expected annual income, 1000 crore. What is my total tax? 150 crore. So this will give me 15% of weighted average annual income tax rate. What is my weighted average annual income tax rate? What is my weighted average annual income tax rate? My weighted average annual income tax rate is my weighted average annual income tax rate is equal to what? Is equal to total estimated tax for full year divided by total estimated income for full year. Okay, this is the formula of my weighted average tax. Now, my dear friends, if my weighted average tax is 15%, right? Means my effective tax rate is not 25%. If I'm earning 1000 crore, I'm only paying 150 crore. If this brought forward loss would not have been there, how much money I would have to be paid? How much money I would have to pay if this brought forward loss would not be there? 250 crore. So how much tax I have saved? I would supposed to pay 250 crore, but I am paying only 150 crore. How much tax I have saved? 100 crore. What is this 100 crore? This 100 crore is 25% of this 400 crore of brought forward losses, right? So we have saved 25% on 400 crore, which is 100 crore, right? Okay. Now, what is my tax expense in quarter one? In quarter one, what is my tax expense? I have earned 100 crores in quarter one, multiply by weighted average annual income tax rate. 15 crore is my tax expense in the quarter one. And what is my remaining 9-month tax expense? How much I will earn in the remaining 9 months? 900 crores multiply by weighted average annual income tax rate. So it is 135 crore, total is 150 crore. Is that clear, my dear friends? Is that clear to all of you? Now let's make it more complex. Let's come to the quarter two. The company is closing the books of quarter two. The company is closing the books of quarter two. Okay. The company is closing the books of quarter two. What is the journal entry? Okay, let me write the journal entry also. Provision for tax expense. Provision for tax. So if journal entry may be asked in the exam, right? So there is no rule that it will be asked or not asked. It may be asked in the exam. Okay. If the question is asking, you have to pass the journal entry. Provision for expense account debit. Provision for expense account debit to provision for tax liability account. To provision for tax liability account. Credit, right? Okay. This is the journal entry. Tax expense in Q1. Okay. Right. Now, quarter two has come. Now, what happened? In quarter one, we have earned 100 crores. In quarter two, we have earned 400 crores. Right? So, how much total amount we have earned in the half year? 500 crores. Right? Yes, you can pass it as a tax expense to provision for tax. Yes, you can write that also, right? So, my remaining 6-month estimated profit is now 800 crores. So Manoj, if you need to compute advanced tax, when you are coming, you have already crossed Q2. How will you compute advanced tax? You will consider 500 crore of actual profit and estimated profit of the next half year. Okay. This is how you compute advanced tax also. Okay. So my 500 crore, my 500 crore is my actual profit. 800 crore is my remaining estimated projected profit. My brought forward loss is 400 crore. What is my total expected annual income? What is my total expected annual income? 100 plus 400, right? Plus 800. 100 plus 400 plus 800. Okay. This is my total expected income. What is my brought forward loss? 400 crore, which was there. Because brought forward loss will never change. जो आपका पिछले बार रिटर्न में आपने कंक्लूड कर दिया वो हो गया. What is my estimated annual taxable income? 900 crores. Tax rate is 25%. What is my tax expense for the year? 225 crore. What is my weighted average tax rate? 225 divided by 900 divided by 1300. Very good. Okay. 17.31%, my dear friends. Now, how much tax I have already booked in quarter one? How much tax I have already recorded in quarter one? 15 crore I have already recorded in quarter one. My dear friends, what will be the tax expense in quarter two? First of all, when I'm closing my quarter two, I'm closing my YTD September also. 6 months ended September also. Yes or no? When I'm closing Q2, it's not only Q2, it's half year. It's half year. Yes. So what is my expense in the half year going by the weighted average annual tax rate? How much money, how much profit I have earned in the half year? 100 plus 400, 500 crores. What is my weighted average tax rate? My weighted average tax rate is 17.31%. What is my total tax expense for the half year? 87 crores, right? 86.55. So how much is my tax expense in quarter two? This minus this. You have to take a cumulative impact, cumulative catch-up impact. This will be your 72 crores. And what is my remaining 6 months estimated tax? It will be 800 multiplied by 17.31%. The total tax expense is 225 crores. Have you understood this or you haven't understood this? Please tell me. Have you understood this? Great. Great, my dear friends. Friends, now let's discuss a illustration number 1 from ICAI study material. Company A has reported 60,000 as a pre-tax profit, means PBT, okay. Company A has reported 60,000 rupees as a PBT in the first quarter and expect a loss of 15,000 rupees each in the subsequent quarter. So 60,000 rupees quarter one profit, in each quarter it is expecting a loss of 15, 15, 15. It has a corporate tax slab of 20% on the first 20,000. So this is a slab wise. Here the question is talking about the slab rates. Friends, don't apply your mind. When I'm saying, don't apply your mind, it is an accounting question. So don't argue with that question that for company, how can you talk about a slab? Slab is applicable for a individual, not the company. Don't write that. The question wants to test your knowledge on the computation of provision for tax. The question wants to test your knowledge on Ind AS 34. The question wants to check, do you know weighted average annual income tax rate calculation? Is that clear? Is that clear or not clear? Is that clear? Yes? Yes? Right? Okay. Okay. So friends, company reported 60,000 rupees in the quarter one. Every quarter it is expecting a loss of 15. So what is my full year profit? If in Q1 there is a profit of 60, in Q2, Q3, Q4 there is a cumulative loss of 45,000. What is my full year profit? My full year profit, expected profit is 15,000. Okay. The corporate tax slab is 20% on the first 20,000 and 40% on the additional earnings. So going by the tax slab, it says that 20% on the first 20,000 and 40% on more than 20,000. Okay. Right. So friends, if I go by the tax slab, what is my provision for tax in the first quarter if I go by my tax slab? So I have earned. I have earned 60,000 rupees in the first quarter. So on the first 20,000, I will create a tax of 20%. And then the remaining 40,000, I will create a tax of 40%. So what would have been my expense? My expense would have been 20,000 if I'll go by the tax slab, right? If I go by the tax slab and consider the slab on Q1 profit, my tax expense would be 20,000. Yes or no? क्या मैंने सही बोला नहीं बोला? अगर मैं सिर्फ टैक्स स्लैब के हिसाब से जाऊं और Q1 के प्रॉफिट के हिसाब से जाऊं तो ये आएगा. बट व्हाट शुड आई डू? बट दिस इज नॉट राइट. We need to see the weighted average annual tax rate. We need to see the weighted average annual tax rate. Right now, what is my expected income for the full year? What is my expected income for the full year? 15,000. So my expected income for the full year, it is written. Expected income for the full year is 15,000. What is my expected tax for full year? भाई expected tax क्या होगा मेरा full year का? If full year 15,000 is income, my tax slab is 20% up to 20,000. So 20,000, 20% means 15,000 multiplied by 20%. It is coming into the tax slab of 20%, right? So my expected income tax rate for full year is 3,000, right? So friends, If I talk about my weighted average annual tax rate, this is 20%. My weighted average annual tax rate is coming at 20%, na? Means if I'll earn 15,000 rupees in full year, I will pay a tax of 3,000 in full year. So what is my weighted average rate of income tax? 20%. So what is my expense which I have to record in every month? So every quarter, 60,000 is the income, I will apply 20%. So 12,000 is my tax expense. Friends, what was the tax expense going by the only slab rate? 20,000. But what is the tax expense which is coming? 12,000. What happens in the next quarter? You have to reverse 3,000, 3,000, 3,000. You have to reverse your tax provisions. Okay. So this is how you have to record your tax. Okay. Is that clear? Now let me make it more complex. When the company concluded Q2 results, it arrived at a profit of 10,000 instead of an estimated loss of 15,000 and expecting a profit of 10k in Q3 and loss of 10k in Q4. Now do the revision. What is my income? In quarter 1 I have earned 60. In quarter 2 I have earned 10,000. In quarter 3 I am expecting 10. In quarter 4 I am expecting a loss of 10. 70,000 is the total profit. 70,000 is the total profit. Okay. Now, what is my tax expense on 70,000? What is my tax expense on 70,000? On 20,000, I will apply 20% plus on the remaining amount, I will apply 40%, multiply by 40%, right? 24,000 is the tax which is coming. 24,000 divided by full year profit 70,000. The tax rate is coming at 34%. The tax rate is coming at 34%. My dear friend, how should I apply my tax? How should I apply my tax? In quarter 1, I have already applied 12,000. In quarter 2, I have recorded total 70,000 of profit. So what will be my cumulative tax on my cumulative profit up to half year? This multiply by average tax rate, 24,000. So total is 24,000. 12 I have recorded. So in the next quarter I have recorded 12,000 rupees of tax provision also. Right? Clear? Is that clear? Not clear? Anyone who is not clear? Now, what is my estimated tax in the third and the fourth quarter? Estimated tax in the third and the fourth quarter? This multiply by this. In the fourth quarter, this. This is how it is going to be calculated. Clear? Is that clear, my dear friends? Is it clear or clear? Please tell me. Yes. समझ आ गया वेटेड एवरेज एनुअल टैक्स रेट? ये समझ में आ गया क्या करना है? You have to compute the estimated income for the full year. You have to compute the estimated tax for the full year. Divide estimated tax divide by total income of the full year. Okay. Now illustration number 5, right? On the recognition and measurement in interim financial statement. ABC Limited manufacture automobile parts. They have shown a net profit of 20 lakh rupee for the third quarter of 2001. Following adjustments are made while computing the net profit. Following adjustments are made while computing the net profit. Okay. Manoj sir, if we have management reporting every month and if we recognize tax like this, they will question why tax is high last quarter and low at now. Manoj, management reporting you can do whatever you want to do. MIS you can drive at your own, but when it comes to a regulatory financial results, when it comes to a regulatory financial statement, it has to be like that only, going by the principle of accrual and conservatism, right? It's not about what management is saying, it's about how we are doing as far as regulatory filings are concerned, right? You have to apply Ind AS and IFRS, and Ind AS and IFRS both says the same thing. So when you say your management, if it is a MIS, Manoj, if it is for internal consumption, you can do whatever you want to do. But if it is going public, then you have to tell your management, dear management, IFRS is applicable on us or Ind AS is applicable on us, and we have to follow these Ind AS and IFRS for the purpose of compliance of our financial statement. And this is the requirement of Ind AS 34 or IS 34. Okay. If you are reporting to central bank, in my view, Manoj, in my view, you have to follow these Ind AS per IFRS. Okay. Yes, my dear friends, bad debt, bad debt of 1 lakh incurred during the quarter, 50% of the bad debt have been deferred to the next quarter. Friends, there was a bad debt. In the quarter, you got to know that one of the customer already become bankrupt. And there was 1 lakh rupee of bad debt, but 50% have been deferred to the next quarter. So friends, whether you follow accrual basis of principal or not in your interim financial statement, you follow accrual basis of principal, right? So basically in this case, you arrive at a profit of 20 lakh, you had a bad debt of 1 lakh, but you recorded only 50,000. And 50,000 bad debt you defer to the next quarter. Is that clear? Friends, is that right? Is that right? Thank you so much, Manoj. Thank you so much for this feedback. Friends, is that right? Saminathan, this 50,000 will not be added. It has to be deducted. This is an expense. The profit is 20 lakh. So ideally 1 lakh should be deducted, but they have only deducted 50,000, right? So the question is it right? Answer is no. The expense or income, whichever is incurred in a period, it has to be recorded in that period only. Going by the accrual basis, it has to be recorded in that period only, right? Second, additional depreciation of 4,50,000, additional depreciation of 4,50,000 resulting from change in method of depreciation. So they have changed the method of depreciation and it resulted into a additional depreciation of 4.5 lakh in the current quarter, and they have taken in the current quarter. Is that right? Yes, this is right. The change in estimate has to be applied prospectively. Exceptional loss. There was an exceptional item of 28,000 incurred during the third quarter. 50% of the loss have been deferred to the next quarter. 25,000 rupees of the loss has been deferred to the next quarter. Is that right? Answer is no. It is not right. So this exceptional loss which has been incurred in any quarter, it has to be recorded in that quarter. Okay. So 25,000 rupees of the loss is required to be deducted. Okay. Additionally, rupees 5 lakh expenditure, 28 divided by 2, 14,000. Okay. Rupees 5 lakh expenditure on account of administrative expenses pertaining to the third quarter is deferred on the argument that the fourth quarter will have more sales. The company has incurred a 5 lakh rupee of advertisement expenses, okay, or some administrative expenses. Company told that, in the fourth quarter we will have more sales, and that is why I will record this expense in the fourth quarter, while they have incurred this expense in the current quarter. Friends, is that a right treatment? Going by the accrual principle? No. This 5 lakh has to be considered in the current quarter only. So how we will solve this question? 20 lakh is the net profit as per the question. Bad debt is 50,000. Additional bad debt. Adjustment is required for additional bad debt, right? Additional depreciation, no action is required. Exceptional loss, 14,000 to be deducted. Administrative expense, 5 lakh to be deducted. Your correct net profit for the quarter 3 is 14 lakh 36,000. I hope it is clear to all of you. Friends, I hope it is clear to all of you. Is that clear? Yes? Great. So my dear friends, now let me show you some multiple choice question, and with these multiple choice question we will revise the entire concept. We will revise the entire concept of Ind AS 34. करें वो? करें या रहने दे? Shall I do it or shall I leave it? What should I do? Shall I do it or shall I leave it? Yes? Okay. Just a minute. Allow me a minute. Friends, just allow me a minute. Just one more minute. Yes, I am sharing a file. Please confirm if my file is visible to all of you. Please confirm if my file is visible to all of you. Please confirm this. Yes. Friends, I hope this file is visible to all of you. This Excel file is visible. Yes. Okay. The primary objective of Ind AS 34 is to prescribe the accounting policies to be followed throughout the year. Of course, no. This standard is talking about the interim period. Prescribe the minimum content of an interim financial report and principle of for recognition and measurement in complete or condensed interim financial statement. Okay. Eliminate the need for annual financial statement. Prescribe only disclosure requirement for listed companies. What is the right answer? The right answer is B. Yes, B is the right answer. You are absolutely right, my dear friends. Ind AS 34 deals with both minimum content and recognition and measurement principle for interim financial reporting. Second multiple choice question. Applicability. Which of the following statement is correct with respect to the applicability of Ind AS 34? It mandate every Ind AS company to prepare quarterly financial statement. Friends, have I told you whether this Ind AS mandate? No. No. It specifies when an entity should publish interim financial reports. It prescribes the accounting requirement only if an entity chooses or is required to publish interim financial report. It applies only to listed companies. This is also wrong. It also not specify. C is the right answer. It prescribes the accounting requirement when an entity decided or required to publish interim financial reports. C is the right answer. Third MCQ. Okay. A condensed interim financial statement should include only balance sheet and P&L, same level of detail as annual financial statement, at least each heading and subtotal included in the latest annual financial statement together with selected explanatory notes, only notes to accounts. Yes, C is the right answer. Right, C is the right answer. They are covering all the component, but limited notes to accounts, and whatever headings and subtotal was considered in the annual audited financial statement, it has to be intact in your interim financial statement also. Materiality. For interim reporting, materiality should be assessed based only on the annual financial information, based only on the interim period financial data, based on annual turnover, based on quarterly turnover plus annual estimates. Tell me what is the right answer. 3. Sorry, 4. Question number 4. What is the right answer? Based on annual financial information, no. Based on quarterly turnover, no. Materiality is not considered only on turnover. No. You have to look at the balance sheet size also. Now, the answer is B or C. Guys, Saminathan, as I told you, materiality is not computed only on turnover. For materiality, you need to look at the balance sheet size also. Turnover is one of the criteria. What is the right answer? B is the right answer. Based on interim period financial data. The financial data includes everything: turnover, balance sheet size, net worth, everything. Okay, B is the right answer. Frequency of reporting. So frequent interim reporting should change annual profit, affect annual measurement principle, not affect annual result because measurement is on a year to date basis, require different accounting policies each quarter. Friends, what is the right answer? Please tell me. Whether frequent interim reporting, every quarter you are doing interim reporting. So every quarter the annual profit will change? Answer is no, annual profit will never change. Right? Whether it should affect annual measurement principle? No. Whether it require different accounting policy each quarter? No, it has to be consistent. C is the right answer. Any problem in these last 5 questions? Have you found these 5 questions to some sort of revision of Ind AS 34 concepts? Yes or no? If you find it useful, I'll go with the another questions. Otherwise, I'll stop here. Yeah. Okay. Let's go to the question number 6. Which accounting policies should be applied in interim financial statement? Which accounting policies should be applied in interim financial statement? Policy is different from annual financial statement. Same accounting policies as annual financial statement unless changed after the latest annual financial statement. Policy based on management judgment every quarter. No. Policy prescribed by SEBI. No. SEBI said you have to apply Ind AS. B is the right answer, my dear friend. B is the right answer. Yes. So B is the right answer. Okay. So now coming to the income tax. Income tax expense in the interim financial statement should be measured using actual tax payable till the reporting date. Should be measured using actual tax payable till the reporting date. Tax rate applicable to current quarter only. Estimated weighted average annual effective income tax rate, previous year effective tax rate. Which is the right answer? I need at least 10 responses. I need response of every student. You are absolutely right. C is the right answer. Estimated weighted average annual effective tax rate. Estimated weighted average annual effective tax rate. Okay. This will be the right answer. Inventory write down. Impairment of inventory. Inventory was written down by 20 lakh in quarter 1. By quarter 3, market prices recovered and the write down no longer exists. So there was an impairment in quarter 1 on inventory. In quarter 3, the inventory prices has gone up, and the whatever was the impairment, the prices has gone up beyond that. How should this be treated? It cannot reverse in interim reporting. This impairment of inventory cannot be reversed. Reverse the write down if required under Ind AS 2. Recognize in other comprehensive income, adjust only at year end. What is the right answer? I need the response from all the students. Yes, you have to, only goodwill impairment reversal is not allowed. Other than goodwill, it is allowed. So you have to reverse the write down if required under Ind AS 2 inventory standard. Okay, right? B is the right answer. Goodwill impairment now. Goodwill has impaired by 15 crore in the first quarter. By year end, recoverable amount has substantially improved. Right? The impairment loss shall be reversed. May be reversed if approved by the auditor. अगर auditor approve करें तो कर देंगे, ठीक है? Shall not be reversed, shall be reversed through OCI. What is the right answer? It shall not be reversed. It shall never be reversed. The reversal of goodwill is prohibited. It is prohibited. Seasonal revenue. A company earns most of its revenue during Diwali, right? Festive season. Under Ind AS 34, revenue should be smoothed evenly over all quarters. So it's a seasonal industry. So the revenue has to be recognized on a straight line basis. Revenue should be recognized only when earned. It is saying that revenue has to be recognized in the period in which it is earned. Revenue should be estimated for remaining quarters. Revenue should be deferred till year end. What is the right answer? Yes, everyone is right. Revenue should be recognized only when earned. B is the right answer. B for Bombay. And I love to see that every student is giving a right answer. Every student is giving a right answer. Great. Yes. Major plant maintenance. A manufacturing entity incurs major maintenance expenditure every 3 years. During quarter 2, management decide to accrue 1/3 of the expected cost, which is correct. Allowed because cost relates to the whole year. Allowed it if approved by the board. Not allowed unless accrual would also be appropriate at year end. Allowed only for listed companies. Friends, what is the right answer? Please tell me. What is the right answer? So this is a major maintenance expenditure which it incurs every year. During quarter 2, management decided to accrue 1/3 of the expected cost. During quarter 2, they decided to accrue 1/3. So whether it is allowed if it is related to the whole year, no. Allowed if approved by the board, no. Not allowed unless accrual would also be appropriate at year end. Means if you are actually getting into the expenditure, then you have to incur it. Okay, right? Bonus payments, friends. An entity expect to pay annual bonuses based on full year profit. At the interim reporting date, the company should ignore expected bonus. Accrue bonus if the entity has a present obligation and reliable estimate can be made. Recognize only at year end, recognize only after shareholder approval. Apply your mind. What should be the right answer? Apply your mind. What should be the right answer, my dear friends? क्या आंसर होगा? बताइए. बताइए, what should be the answer? What should be the answer of this? At the interim reporting date, ignore expected bonus. No. Accrue bonus if the entity has a present obligation, reliable estimate can be made. Recognize only at year end, recognize only after shareholder approval. B is the right answer, my dear friend. It has to be for the year, it has to be scattered. So you have to record if there is a present obligation and you can make a reliable estimate. Compared with annual reporting, interim financial reporting generally require no estimate, require greater use of estimation method, prohibit management estimate, use only audited information. Which is the right answer? 13B is the right answer. B for Bombay is the right answer. Okay. 13B. It require use of estimation method. Comparative information. An entity prepare quarterly interim financial statement. Just a minute. An entity prepare quarterly interim financial statement. For the statement of profit and loss for the current quarter, comparative information should include only previous year annual figures. So for the current quarter, will you give the comparative figure as an annual figure? No. Corresponding interim period of the immediately preceding financial year. So corresponding period of the last financial year, yes. Only previous quarter? No. No comparative information is required. What is the right answer? This. Sir, YTD we also give, but here it is only given these 4 options. In the 4 options, the appropriate option is answer B. Recognition principle. Which statement best reflect the recognition and measurement principle under Ind AS 34? Interim reporting follows different recognition principle from annual reporting. Interim reporting uses annual recognition principle but applied on a year-to-date basis. Interim reporting is entirely cash based. Is that right? No. It is on accrual based. Interim reporting permits income smoothing. No. It is not permitting your income straight lining. C and D is not the right answer. What is the right answer? Interim reporting follows different recognition principle from annual reporting. Interim reporting uses annual recognition principle but applied on a year-to-date basis. B is the right answer, my dear friends. Yes, B is the right answer. Okay. Now, this is what it says. Just a minute. Let me remove this word highly expected in CA final. Let me remove this. Okay. XYZ Limited incurs 24 crore towards annual advertisement expenditure in April every year. So they spend 24 crore rupees in the brand promotion, advertisement, right? Management proposes to defer 75% of the expenditure to subsequent quarters since the benefit will be received throughout the year. So they are incurring the expense in the quarter 1, but they are extrapolating it on the full quarter. They are straight lining on the full year, which is the most appropriate accounting treatment under Ind AS 34, right? Defer 75% because benefit is over the year. Recognize the entire expenditure in April unless it qualifies as an asset under another Ind AS. Capitalize as an intangible asset. Spread equally over the 4 quarters. What is the right answer? B is the right answer. B is the right answer, my dear friends. B for Bombay is the right answer. So friends, we have covered the 16 questions, 16 multiple choice question for the revision of Ind AS 34. We have shown you, I have shown you the financial results of Infosys Limited. I have covered 2 important questions from ICAI study material. I have covered few questions on the concepts from my side, right? And I have covered all the concepts from Ind AS 34, right? I believe you guys have understood this standard very well. I believe you have understood this standard by core of your heart, by depth of your heart. If you have not understand any topic or any concept of this standard, please let me know, because I have covered all the aspect, all concept with the examples, MCQs, everything, right? So let me know if you have any question, my dear friends. Let me know if you have any question. This is a small standard, right? So if you will cover this Excel file and these questions, I will share with all of you, your job is over. Yes. Friends, tell me if you have any question. How did you like the session? Whether in the session you got the clarity with the clarity? Yes. You got the clarity with the clarity? Yes. Great. Great.
So friends, if you don't have any question, thank you so much. So let me conclude the session now, right? So stay happy, stay safe. Bye bye. Take care. Okay. Or should I wait for 30 seconds for anybody to ask any question? No? Great. Thank you so much, my dear friends. I will share this Excel file and the MCQs with the ICAI Board of Studies, and they will upload this on the portal. Thank you so much. Bye bye. Take care. Session is over.
Recording stopped.